Hi, this is Scott Murray. Welcome to the Daily Economic Market Shout for Friday, February 24th, 2023. More inflation news, more disappointing inflation news. However, I wouldn't really take it to the bank quite yet. We saw 0.6 double. This is the core reading, PCE January. Expectations were 0.4. Remember, PCE is the look at the consumption element of GDP and how we deflate. We've had three measurements primarily that we use. Consume CPI, a little bit more towards housing because that's the overall basket of a consumer. PECE is the GDP calculation that we do. Finished goods, remember, finished goods are things that we buy to consume. So it's a very specific measure there. And the PPI, which is primarily focused on the producer. Now, when we get down to this number, we've seen some adjustments to the seasonality factors. What are seasonality factors? They are components that are added to kind of level out the ins and outs of the pricing that occurs during a month. What we generally see is at the beginning of January, we'll see some discounting that goes on from retailers, not too surprising. So that factor is weighted higher a little bit. The factor in November is lowered a little bit. So they come a little bit even. December down, January up. So that the element of that seasonal mix where prices are higher in higher in December and lower in January are adjusted out so that we can kind of see the trend that exists in the number. Now, is it the correct measure? Most likely not. And it was a little bit odd this month because we saw the durable number go up significantly. Now we've seen some discounting on the auto side of the equation. So we're expecting a little bit of weakness there in the PCE reading. So the fact that it went the other way probably skewed the overall results up. Services really don't have this element. So we've continued to see a modest uptick. We're still running in the 5% range year over year. So that's pretty consistent. We've seen a little non-durable deflation. Those are very volatile, particularly apparel category moves around a lot. So not too surprising there. So the 0.6, is it a real 0.6? Probably not. Is it a little bit elevated from December? Yeah, we have seen readings from the Fed reports during this month and from the ISM that told us that there was an increase in prices. So yes, there is some particular push. Not surprising when we see 500,000 jobs into the economy to see that flow through. What's also helpful in this reading is we do get some sign that savings is up, and that's also helpful for the economy, meaning savings tying into investment. Clearly, the US government could try a little bit of savings here. This means that there's some fuel ahead, and the consumer's probably doing a little better than people expect. This is Scott Murray for the Daily Economic Market Shout. Thank you for joining me.